Yeah, it's quite amazing. Here we have been telling investors to, I've been standing on the soapbox for 25 years, basically saying buy silver, and I've been silver and gold. I've been very unsuccessful because the world is still not from our company's point of view, because our clients and investors are mainly wealth preservationists, so they actually understand gold and silver, but they are a minority. That most people have stayed in the stock market, in the property market, in the private equity market, and they think in dollar terms they're doing so well, and nobody's thought about gold. All of a sudden, a major bank says from nothing, buy 20% gold. That is just, it's such a turnaround. It's unbelievable. So banks are now, if you want, panicking. And realize that they've actually been totally wrong for all these years. And now they're advising, or every bank now is advising clients to hold 10 or 20% of gold from nothing. And you can imagine, Kai, what effect this has on the gold and silver markets. There ain't that much gold around, and silver, there's virtually nothing available. The gold market has year after year produced 3,000 new tons of new gold every year. 3,000 tons, just over. And that's been absorbed in normal times by the market without anybody rushing to buy gold, and with only 0.5% of world financial assets into gold. And it's still been absorbed every month. Now, all of a sudden, investment managers are talking about a 20% of gold. The BRICS countries are buying as much as they can. Central banks in the East, because the West still haven't understood what's happening. The central banks, they only print debt. They don't understand that they should own gold. And they haven't increased their holding, except for maybe Poland or a few countries. But in general, no Western country has increased their holding of gold. Or no central bank in the Western country. But China is buying. India's, of course, buying. All the Eastern countries are buying. Russia's buying. And as I said, all the BRICS countries are buying gold, and now institutions are starting to buy, and also said the Western financial world advisors, etc., money managers are recommending gold, which is, of course, hasn't happened for as long as I've been in this market. So the demand is massive, and there just isn't enough gold to supply this demand. So the only way that this major increase in demand from 0.5% up to 20%, that gold doesn't exist at that price. So the only way to satisfy that high demand is at much higher prices. And this is what we're going to see. And this I've been saying for quite a long time now. The last few years, I've said that gold is going to go up by multiples. Now, as people say, silver is gold on steroids. We're going to see silver going up by at least twice as fast, maybe faster as gold. I'm not one for forecast, but I said several years ago that gold. I expect gold already. I did 20 years ago to go to 10,000, because that's the figure it would reach at least. And if we get down to the old ratio of 15, which is the historical ratio of gold to silver, that gives you 666 silver. It's not a forecast, but I would say that it's $666 silver. It's not a forecast, but I would say it's very, very likely it happens. Remember that it's fiat money. We don't know what the money is worth. But, if you have, compared to holding paper money, this is a much better way. Silver will go up faster. It will be more volatile. It's not for widows and orphans, but, have mainly gold, physical, and have some silver. That's what we recommend. Well, as I said, we are now entering the exponential phase of the metals, for the simple reason that the world economy, and especially the Western economy, is now collapsing. And so you get this phase at the end when things go a lot faster. Currencies is no use comparing on, is the dollar stronger or is the euro stronger or the yen? It doesn't matter. They're all absolutely rubbish. They all go to zero. So therefore, we have to have other ways of looking at gold and silver, of course. And the way we look at it is ounces or kilos or grams, or whatever level you're investing at. So that's the only way to look at it. To measure your wealth every day, if you have gold and silver, in dollars is totally useless. Totally useless. Look at the prices now, right? We don't. It's not. People think, and that's because that's what governments tell them. People think that prices are going up. They aren't going up at all. It's the value of the currency, and of course, as you said, why is it going up now? Well, first of all, the money supply has been increasing rapidly for 50 years, let's say, and certainly in this century, and gold hasn't kept pace with that, and that's happening now. And of course, now gold is also forecasting that there will be in the next 5 years, maybe more, 10 years, unlimited money printing to try to save this world. And sadly, that is going to fail. But that is the consequence of the levels of debt we have now, and the bond market. It's not going to be possible to finance the deficits that we're going to see in the future. And therefore, interest rates will go up dramatically. And interest rates also has to obviously reflect the risk of default. And the risk of default is going to increase by the day, because we will see failures in corporate markets, we'll see failures in government markets, and obviously we will see massive failures in the banking world. And that's why, I said for years that the governments are not going to be, or central banks, to be able to control the currency, the rates, the interest rates. And they will try with the shorter term, but it's going to fail. The market, and led by the longer rates, will just sell off. The bond market will sell off, which means that the interest rates are going to go up and up and up. And I came to the UK in the early 1970s, and I saw inflation during 7-year period being an average about 15%, 15%. I saw my first mortgage in 1973. The interest on that went up to 21%. 21%. How many people today, Kai, can afford a 21% mortgage rate? Nobody. Nobody. And whether we will go to that level or not, I wouldn't be surprised. We will certainly go up in the teens. And of course, so there won't be, people will not have money to pay for the mortgage or pay for the debts or interest on their debt. And that's so the government will have to print unlimited amounts of money to help them. And this is how you get the cycle of higher rates, higher inflation, and collapsing currencies. It's so simple. Remember, we decided to go into this 40 years ago to gold. We went in actually in the early 2000s because we waited for the gold to bottom out, and we were lucky to pick it up almost at the bottom. And since then, I've never worried one day. I never had to look at the price of gold. Or we didn't go into silver heavily or at all, actually, in the beginning. And then we went in a bit when we thought the timing was right. And silver now, of course, I'm sure we'll talk about that, is going to go up faster than gold. But for wealth preservation, gold is the right metal to hold. And gold is still going to go up, in my view, by multiples from here, reflecting all of the problems that we will see in the economy. And as we say, I think, gold normally keeps pace with the cost of living and the purchasing power. I think now gold is going to go much faster than purchasing power for the simple reason that nobody owns gold today. We've had about 0.5% of world financial assets in gold. That is now going to change dramatically, and not just temporarily. There'll be a fundamental and permanent change in the way that people look at gold. And that's what people have to take into account now. This is not a speculative move, catching a few $100s on the gold price or a few tens of dollars on the silver price. This is much, much more fundamental. And until people realize that, they're going to, investors, I'm talking about especially, they're going to see the total destruction of their investments, because we'll have a massive wealth transfer from paper assets to real assets in coming years. Let's say you have a failure in the banking system. That doesn't affect people straight away, except for the people who have money, or let's say not all banks will fail at once. But the ones that fail obviously means that people who have money in the bank will not be able to get to their money. And the same, you take in the Weimar Republic, politics was in a total mess, and there were political figures that were murdered time and time again. And we haven't seen much of that yet, but I'm sure that's going to be more and more of that because people will be generally unhappy, and they will find some culprit that they can blame for that. So there will be those kind of political murders. There will be, I wrote this many years ago, there will be change of leadership, and very few presidents or prime ministers or chancellors will sit to the end of their period, because there will be votes of no confidence. People will be ousted, although they're elected for a period, because in general times are going to be so bad that nobody can stay in power for the full period. So I see a political system which is in a total mess, and leaders will come and go. I mean, you see now in Europe, you see Macron. I mean, his days are counted. Obviously, they've been for a long time. You see Starmer again; his days are counted. And Germany might last a bit longer, but this is and Trump is now still on a high.